Hello everyone. Today I'm going to be discussing on how to use supply and demand levels to trade or day trade or scalp the 5 minute and 1 minute time frame using supply and demand or even SMC. I just see them as the same thing. But we have to do it correctly. Now, as a supply and demand trader or a trader using supply and demand strategy, your job is to locate and trade these points where the banks enter their long positions or their short positions. In order for you to identify a zone where the banks are entering from, there has to be some changes within a zone, which leaves you with an order block, of which I don't know. I don't know if you understand what I mean by an order block, but if you're an SMC trader, you should know what I mean by an order block. And let me just dive into it. In a situation whereby the market is forming lower high, lower low, lower high, lower low, lower high, lower low. You as a supply and demand trader or an SMC trader, your job is to look for the beginning of that expansion and trade off from, which is your order block. Yes, in this kind of market situation, we can clearly see that yes, the market is bearish now, and the market is forming lower highs and lower lows, breaking structures to the downside. Yes, you can see it clearly, breaking structures to the downside. Now your job is to look for the beginning of the expansion. Where is the expansion? These are all expansions. This one, and then this one. So if you're going to be trading in this sort of market situation, you should be trading from zones like this, and then zones like this. This is what you should be trading up from. These are all your supply zone. And in a bullish market situation, whereby the market is giving you higher high, higher low, higher high, higher low, higher high. I didn't draw it well, but let me just do it for something like this. You call these levels here your demand levels. Why? Because they broke structure. There must be a break of structure before you qualify any zone as a zone to enter your longs or shorts from. Yes, there must be a break of structure before you enter longs. And even if you want to add more confluence to your setup, I think you should apply your fib levels to it and make sure you're trading off premium zone and discounted levels. Like for example, if you fib from this swing low here to this swing high, we discovered that we are chilling at the 0.79 zone of the Fibonacci, which simply indicates that yes, at least we are buying at a cheaper rate, and we are targeting the next swing high for our take profit, which is still good. We don't want to be greedy. Now let's look at chart examples of what I mean by using the 5 minute and 1 minute trade. You can do this on any time frame, but for the sake of this video, we'll use 5 minute and 1 minute. Yeah, so let me just delete everything on this chart. Before you enter any trade in the market, let me say on Mondays, What you should do first is, number one, you identify the trend of the market. Now, in this market situation, you can see that clearly the market is forming higher highs and higher low. Higher highs, higher low. The market is bullish. Yes, the market is bullish. If you look, the market is bullish, forming higher highs and higher lows. So you as a supply and demand trader, how do you trade this type of market? Let me use this one here as an example. The market created, let me just use this zone here. Here, the market created a swing low here, and then created a swing high here. I wouldn't be talking about this because there was a flip zone that was created here. Yes, a flip zone. Flip zones are areas in which the market reacted. Maybe the market reacted to a bullish order block and fails it. That is what happened here. Yes, the market reacted here. You can see the reaction and then broke above that zone, giving you a fresh demand level to enter longs from. But that is not what we're discussing here. So basically, you can see the market is bullish, and we can see the market respecting all demand levels. So let me just use this one here as an example. This is what happened on Friday. I think I guess so. The market expanded from this region here. There was an expansion here, but the market never came back down to this demand level created the whole of that Friday. Maybe on Monday you should be seeing the market coming back to this demand level that was created. So to further explain this, the market created another new demand level here. New demand level here. As a supply and demand trader, you should be looking at the expansions the market is creating. Yes, to help you filter good demand levels and fake ones. The reason why this demand level is good is because, yes, you can see clearly here there is an imbalance. There are imbalances within this region. Nobody is saying that this region is not good. This region here is also good, but you should work with the most recent, and they are basically trade off them. You might not be right all the time, but at least you should just do what you know how to do best. How do you trade this market? Now the market expanded from this region and left us an imbalance that needed to be filled. So what do you do as a supply and demand trader? You look at you wait for the market to come into your demand area, and once the market gets into your demand area, you either do two things. One, you go aggressive. What I mean by going aggressive is either you buy straight from that point. Let me say you enter longs straight from this point here. You put your stop loss here and you target this swing high that was created here. Yes, you target this high here without looking for confirmation. Secondly, if you are very conservative, this is what you should look at. One, you should look at the market structure. The market is forming, like the lower time market structure the market is giving you before you trade the market. You want to see a change of character. What do I mean by change of character? You can see the market is forming a lower high here, a lower low, another lower high, lower low, lower high, and yes, the market is creating multiple distinct structures for you. So what do you do? So what do you do then? You can see the last lower high that was created was somewhere here, somewhere around here. You just go to your 1 minute time frame. You go to the 1 minute and look at structure. Now you can see clearly that yes, the last lower high the market created was this one, which is the most recent one, was here, this one. Now you can see the market give us that change of character we are looking for. Here, we broke this lower high, giving us what we call a change of character. Now we wait for the market to come back into the fresh demand level that was created after the change of character, and then we enter longs, which gives us a tighter stop loss, and then we target the same level like this. As simple as that. But if you were still going off aggressive on this trade, it's still fine. But in order to get good and quality trades, at times you just have to wait for change of character before you trade in the direction of the market. So that is just basically it. It's not something too complicated. You just have to just clean and repeat. You mark your demand levels, wait for the market to get to your zone. Either wait for the change of character before you take your longs, or you go off aggressive. Either ways, it all depends on you. Sometimes I do go off aggressive, and sometimes I just want to get that change of character, giving me more, confidence to trade the market. So that is just it. Let me see if I can give you another example. Okay, let me see. I think this is another good example of what I'm talking about. I think I took this particular trade, but yeah, I think I took something like this. You can see the market expanded from this zone on the 5 minutes. You can see this bearish movement here. Just forget about all this noise that the market is doing here. The reason why these candles are large is because money came into the market, big money came into the market. So the market had no control over itself, rather than to give us a big bullish candle, indicating that yes, smart money is present in the market. So now we are confident enough to go for longs, long position. On this particular one, I think I went aggressive. Go for long position, targeting the swing high, the recent high the market created before coming back into that demand level. And you can see the market created new levels. This thing is it's not something too complicated. You can see more levels were also created here. Let me know. More levels were created here. So even if you use the Fibonacci tool to feed from this point to this swing high here, you can see yes, this other block here is discounted. So if you want to be conservative on this kind of trade, you either take your longs from here and keep your stop loss at the one of the feed levels, and then you target the 0, which is the swing high the market created. All these things here, I'll just call them liquidity. all these ones, this one, liquidity, liquidity, liquidity. There's an imbalance here that needed to be filled, and then another block below that imbalance. If you're not a smart money trader, you might not understand this, but I'm just teaching you how to basically use the 5 minutes and 1 minute to trade. And that is just it. It's not something too complicated. I believe with this two example I showed you, I think you should be good. So by Monday, I think I should be expecting the market to come back into this zone. And what am I going to be looking at? I want to see the market do something like this. They come into the zone and does something like this, breaks structure, and then they take longs, targeting this high here, or we use flip zone in case the market fails, because I know the market has been buying immensely. Yes, and there is an imbalance here too that needs to be filled. So the market is going to break that zone. Then I think the next level here should be this one. So we're looking at these two. But for now, I think we should be good. Let me just clear this chart. I think this video is getting too long, and then we should be good. So thanks for watching anyway, and have a good trading life. Don't complicate your chart. Keep your chart simple. Just keep things simple. You must not win all your trades. But with simplicity and discipline, at least you should be good. Know when to take trades and know when to exit. That is just what you need to keep in mind. You don't need too many strategies to trade this forex market. You just have to keep things simple, don't complicate things. Anyways, peace out.